A very good morning. Welcome to Market Cafe here on ET Now with me, Lisa Fernandez, and my colleague with me, Snehi Shah. Good morning, Snehi.
Good morning, Lisa.
Well, so this is the show where we'll take you through all that's trending on the domestic as well as the international front. We'll talk about the domestic updates in the latter part of the show, but let's start with the international market that Snehi has tracked very closely for us. Snehi, what's the handover coming in from the global market?
Absolutely, Lisa. Let me take you and our viewers through that. Good morning to all our viewers on this choppy Friday morning. Let's take a look at what the global handover looked like, and let's start with the US markets. And the S&P 500 futures were little changed Thursday night after the major averages dropped for a third straight day. During the regular session on Thursday, the Dow closed below the 50-day moving average for the first time since the 1st of June, which is a bearish signal for investors. The 30 stock index tumbled 290 points or 0.8%. Meanwhile, the S&P 500 declined 0.7%, and the Nasdaq Composite was yet again the biggest loser among all the three indices, which was down 1.1%, almost 1.2% downtick coming in for the Nasdaq. Now, the 10-year US Treasury yield on Thursday rose to its highest level since October 2022, and this move came after the July meeting minutes from the Federal Reserve suggested further interest rate hikes could be possible as central bank policymakers remain concerned about inflation. Now, the Dow is on pace for its worst week since March, lower by almost 2.3% through Thursday. Meanwhile, the S&P 500 is headed for a third straight week of losses, a streak that hasn't happened since February of this year. The Nasdaq Composite also is set for a third consecutive losing week for the first time since December last year. So, largely weak handover coming in from the American markets, but let's shift focus to Europe and see what European markets did, and they retreated on Thursday after the US Federal Reserve July meeting minutes showed that further interest rate hikes were not off the table. The pan-European stock 600 provisionally closed almost 1% lower. Industrials fell 2.8% and tech stocks were down by 1.8%. Now, the European blue chip index closed Wednesday's session down 0.1% as investors assessed UK's inflation figures along with Eurozone's second GDP product data. The DAX was down 0.7% and the FTSE also closed lower 0.6%. So largely weak handover coming in globally. Let's see how that pans out for our markets this morning, Lisa. But this was on the equities front. Why don't you take us through what crude and other commodities did?
Right, so we know how crude prices fell in the last three sessions, but on Thursday it actually rose, and that was on the back of two triggers. One is that dollar index, it has slipped off its 2-month high, and also this comes after a day after the Fed minutes was released, and it anticipates, and the investors are anticipating potential rate hikes going forward. And another reason being that China's government is looking to soothe the economic worries out there, because the statement coming in from China's central bank said that it would keep liquidity reasonable, ample, and they will also be maintaining precise as well as forceful policy to support the economic recovery against the headwinds. So if I look at the oil prices, it's in green, and the WTI crude price, which was below 80, that is at around $80.51 per barrel, and even Brent crude oil, that stands at around $84.2 per barrel. So that's on the crude, while the gold, that is at a 5-month low on the back of higher yields as well as rate hike, which is which is dominating the mood, and gold prices, that stands at around $1,923 per ounce. So that's on the crude as well as the commodity check.
Absolutely, Lisa. Thanks for taking our viewers through that. Now, with that, let's also track all the cues that you should be keeping on your radar this Friday morning. Let's start by looking at global cues then, and Eurozone CPI numbers will be out today, as well as UK retail sales figures will also be out today. Shifting focus back to home, then on the corporate action front, you've got the board of Jubilant Ingravia. They will be considering fundraising in their meeting today. On the IPO action front in the primary markets, you've got Concord Biotech listing that will happen today, and Pyramid Technoplast IPO will open for subscription today. So all these cues, keep on your radar for today.
But let's look at some global stories that's making headlines. Weekly US jobless data has dropped to 11,000 to 2,39,000, and that's pointing towards a tightness in the labor market as the job growth slows down. Remember, this tightness in the labor market, it's underpinning the economy, as there has been a solid increase in the retail sales in July and a surge in single-family home building, which prompted economists to raise their growth estimates for the third quarter.
With that, let's shift focus to earnings then, and Walmart posted a strong Q2 and has hiked its forecast as well. Meanwhile, the company's international business posted its best quarterly performance in several years. However, the CFO has urged caution due to potential spending challenges. Meanwhile, SpaceX turned profitable during their first quarter results due to surging revenue.
And a fresh bout of US regulatory scrutiny is setting off a hiring spree at Goldman Sachs Group, according to Bloomberg, and this as the company's leader is seeking to remediate the issues raised by the banking supervisors. Well, Wall Street Bank is enlisting several hundred new staffers to help address the concerns from authorities, including the Fed Reserve.
And China's Evergrande, which is the world's most heavily indebted property developer, has filed for protection from creditors in a US bankruptcy court. The company has sought protection under Chapter 15 of the US Bankruptcy Code. This filing comes amidst growing fears that problems in China's property sector could spread to other parts of the country's economy as growth slows.
And shifting gears to politics now, US President Joe Biden, he will be hosting the leaders of Japan as well as South Korea in a first of its kind trilateral meeting today at Camp David. Well, the president is hoping to smoothen the historically icy relationship between the two neighbors in order to bolster the military cooperation in the region amidst the rising tension from China as well as Korea.
Alright, with that, let's slip into a very short break. You don't go anywhere because we'll come back with what the Asian markets are doing this morning. Hi there, welcome back and thanks for staying tuned to Market Cafe. Let's take a look at what the Asian markets are doing this morning. And Asia Pacific markets have fallen on Friday as investors assessed Japan's July inflation data and fresh blows to China's real estate sector. Now, Japan's core inflation rate fell to 3.1%, down from 3.3% in June, and headline inflation remained at that 3.3% mark. On the back of this, let's take a look at what Nikkei is doing. And you've got Nikkei that is nominally lower, just 0.4% lower in trade today, 142 points lower for the Nikkei this morning. Investors continue to closely watch the Japanese yen, which touched the key 145 level for the first time in about 9 months last Friday, crossing into a zone that sparked an intervention by Japanese authorities in September and October last year. Meanwhile, embattled Chinese real estate agent Evergrande has filed for bankruptcy protection in a US bankruptcy court. On the back of that, let's look at what Shanghai is doing this morning. And Shanghai is up 0.3%, and followed by that, let's also take a look at what Hang Seng is doing. And Hang Seng also seems to be up today. Hang Seng is down 0.3% in trade this morning. Let's also take a look at what Korea is doing, and Kospi. Kospi is the index that we're talking about. Kospi is down nominally 0.4% lower, with downticks coming off only 9 points this morning. Lastly, let's also take a look at what Australia's index ASX 200 is doing. Pretty flat movement coming in from Australia's index with a slight positive bias, just 6 points in the green. Now, the dollar index hovered near a 2-month high on Thursday after Federal Reserve meeting minutes left the door open for more rate hikes, and data this week indicated a resilient US economy. So this is largely on the Asian markets, a largely mixed performance by the Asian markets this morning. GIFT Nifty, let's take a look at that, up 20 points, up 0.1%, so indicating a positive bias and a flattish but rather positive start for the Indian markets this morning, Lisa.
So that's the handover coming in for the Indian market. Thank you, Snehi, for taking us through the Asia check.
Hi there, welcome back and thanks for staying tuned with us to Market Cafe. Now let's get a move on with the show, and in an ET Now exclusive, in a big move, the government may bear the entire cost for giving 70 lakh new LPG connections. ET Now has learned from sources that the Finance Ministry is considering a proposal from the Oil Ministry to give 100% subsidy for new LPG connections. My colleague Prakash Priyadarshi has more details on this report. Prakash.
Yes, we are learning from our sources that the Finance Ministry is considering a proposal to grant approx rupees 4,000 crore to provide 70 lakh new LPG connection to the consumer. We are given to understand that the Oil Ministry has prepared this proposal and sent to the Finance Ministry for its consideration. Expenditure Finance Committee of the Finance Ministry is evaluating this proposal at this point of time. Since connections will be given under Ujjwala scheme, we are learning from our sources that the Oil Ministry has made a proposal to change in existing structure of the Ujjwala scheme in order to provide relief to the oil marketing companies like IOCL, BPCL and HPCL. As under new proposal, oil marketing companies will not have to share the cost of a subsidy burden with the government in a ratio of 50%. So that's a big relief when it comes to oil marketing companies. As per the proposal, government will bear 100% cost of the subsidy under a new scheme. Moving ahead, sources are also informing that government may also increase the cost of a connection under a new structure. That may be increased from 3,200 rupees to 4,300 rupees per connection. So it's a big development coming in. Apart from that, when it comes to consumer, sources are also informing that under new structure, consumers will also get a big relief as they will not have to pay EMI to the oil marketing companies in order to get new connections. So this proposal is with the Finance Ministry for its consideration, and sources are informing that the Oil Ministry will approach Union Cabinet for its final approval after EFC nod.
Well, so with the government likely to bear the subsidy, big relief coming in for the OMCs, but no relief from inflation in near sight, and that is according to RBI's latest monthly bulletin, where inflation is said to average far higher than the 6% in the current quarter. Ankur Mishra joins us with all the details.
Yes, Reserve Bank of India's State of the Economy article says that inflation is going to hover over 6% in the second quarter. Now, this commentary is important as you have seen the last month's CPI inflation data, which was a kind of shocker. It came at 7.44%, although Reserve Bank of India in its monetary policy has already revised its guidance for the whole fiscal year to 5.4%, and it was 5.1% earlier. But this commentary is saying that the second quarter CPI number is going to be over 6%, which is outside the comfort of Monetary Policy Committee. MPC has to maintain CPI inflation 4% plus minus 2%. So over 6% inflation is definitely not auguring well for Reserve Bank of India, and that is why they have continued to maintain the eye on inflation. In fact, the Reserve Bank of India governor in the monetary policy itself said that all actions as and when needed will be taken by Reserve Bank of India. Apart from that, the State of the Economy article also highlights about the risk of El Nino. It says that the shadow of El Nino looms over the second half of the year. It also talks about the crude prices, saying that yet another upside risk in the outlook of crude oil prices remain. As far as the liquidity situation is concerned, Reserve Bank of India's decision to include incremental CRR has been defended. It has said that after the withdrawal of rupees 2000 notes, there was a situation of surplus liquidity which was needed to be taken back from the bank, and hence this step has been taken, and later on there will be a review of the situation. The governor has already announced that it is going to happen on or before September 8th.
Thanks, Ankur, for all those details on RBI's latest bulletin report. But let's move on then. And the centre has taken steps to crack down on fraudulent calls and cyber fraud. The Telecom Ministry has announced it will prohibit the issuance of bulk SIM card connections and replace them with a business model. Here's what the Telecom Minister Ashwini Vaishnav had to say. Listen in.
कि बल्क कनेक्शन का सिस्टम डिसकंटिन्यू करेंगे, उसकी जगह प्रॉपर बिजनेस कनेक्शन वाला कॉन्सेप्ट लेके आएंगे, जिसमें कोई भी बिजनेस ग्रुप, कोई भी कॉरपोरेट, कोई भी इवेंट के लिए अगर बड़ा कोई लेना चाहता है तो उसका एक प्रॉपर जो रजिस्ट्रेशन होता है, मान लो बिजनेस है तो उसमें जीएसटी रजिस्ट्रेशन होगा, पैन होगा, उसका आईटी रजिस्ट्रेशन होगा, राइट। कोई भी कॉरपोरेट है तो उसका एक प्रॉपर सिस्टम होगा, उसके बेसिस पे बिजनेस कनेक्शंस दिए जाएंगे। और उस बिजनेस कनेक्शन में भी जो भी इंडिविजुअल है उस इंडिविजुअल का केवाईसी भी करवाना पड़ेगा। हम लोगों ने अभी तक का जो डेटा और जो एविडेंस देखी उससे ये समझ में आया कि बहुत बड़ी कॉम्प्लिसिटी है डीलर की। जो पॉइंट ऑफ सेल होता है, जो सिम बेचता है, उसकी बहुत बड़ी कॉम्प्लिसिटी होती है. वो एक्चुअल जितना चेक करना चाहिए, पुलिस वेरिफिकेशन मैंडेटरी कर रहे हैं. जो भी डीलर बनेगा उसका वेरिफिकेशन, बायोमेट्रिक वेरिफिकेशन और पुलिस वेरिफिकेशन मैंडेटरी कर रहे हैं. उन सभी पॉइंट ऑफ सेल के जो डीलर्स हैं उनका रजिस्ट्रेशन कंपलसरी कर रहे हैं.
Well, on the center banning the bulk SIM sales, let's go across to my colleague Sameer Dixit to get more on this report. Over to you.
In a bid to curb the cyber fraud across the country, the government has taken two big initiatives under the telecom reform. The Union Minister Ashwini Vaishnaw informed that now the bulk SIM sale will be discontinued and the bulk SIM sale will only be allowed to the registered business connection or the commercial entity. So the clause is that the business connection or the commercial entity, they have to go through a detailed verification process, a complete KYC they have to adopt, and only after that they can go for the purchase of bulk SIM. And if they are distributing these SIMs that they have bought in under the bulk SIM process, then those detailed KYC has also to be submitted. So the bulk SIM other than the business connection or the commercial entity will not be allowed. Second big reform is that the dealers, action will be taken against the fraudulent dealers. As of now, there are around 10 lakh dealers across the country, but the reform mentions that the dealers have to mandatorily go for registration. They have to get themselves registered, and not just the registration process. They have also to get the police verification. So only after completing these process, the dealers will be registered and they will be allowed to sell the SIM or even the bulk SIM. So these are two big reforms that the government has taken. But in addition to this, the government has recently launched Sanchar Sarthi portal, and government says, minister says that this Sanchar Sarthi portal has helped a lot in curbing the fraudulent activities. For example, around 62,000 dealers, they have been blocked because they were indulged in fraudulent activities. Similarly, 52 lakh connections, it has been, that was illegally taken, so that has been blocked. So these sort of steps the government has taken, and government understands that the two major reforms that has been taken recently will also help to curb the cyber fraud across the country.
All right, thanks Samir for all those details on the ban of bulk SIM sales. But India's top 4 electric two-wheeler makers, which were allegedly found to have violated norms by artificially keeping the prices of their products lower to claim the government's FAME subsidy, have so far collectively paid about 10 crore rupees to customers of the more than 300 crore rupees that they had agreed to refund. My colleague Sumita has more details on this. Over to you, Sumita.
Right, so India's top electric vehicle makers, which were allegedly found to have violated norms by artificially keeping the prices of the products lower to claim government's FAME subsidy, have so far collectively paid about 10 crore to customers as part of the refund. Now, the entire amount was 300 crores, and of that 300 crores, 10 crores has been returned. They had agreed, in fact, to refund the entire 300 crores. Sources within the Ministry of Heavy Industries have confirmed to ET Now. Remember, just a year earlier this year, a government probe into customer complaints had found that companies like Ola Electric, Ather Energy, TVS Motor and Hero Motorcorp were billing their charger and proprietary software as an add-on to their electric scooters in a bid to lower the reported sale price of the products and be eligible for subsidies under the FAME 2 scheme. After a whistleblower's complaint brought those issues to light. Now, of these brands, Ola Electric, Ather Energy and Hero Motorcorp have cleared around 10 crores collectively. Remember, under the FAME subsidy scheme, the centre offers subsidy on the sale of locally made EVs. However, electric two-wheelers that are priced above 1.5 lakh are not eligible. But now the question is there a timeline in place for all of these EV makers to return the rest of the subsidy? Well, according to a meeting with the Ministry of Heavy Industries, sources within the Ministry of Heavy Industries, they told us that the government is open to giving a time extension to return the unlawfully claimed subsidy, a time extension to all of these EV makers. However, that subsidy will not be waived off. However, the other thing is that a few EV players in the EV ecosystem are in fact pushing for a resolution to this, pushing that the subsidy be waived off.
Well, thank you, Sumita, for sharing a perspective on government's probe on the FAME subsidy schemes. But now moving on to some tax-related news, the IT department has rolled out new guidelines for calculating income proceeds from life insurance policies where total premium exceeds 5 lakhs per year. Well, take a look at this report by Bhavya.
So the Income Tax Department on Wednesday prescribed a new way of calculating income received from the proceeds of the life insurance policy. So according to the Central Board of Direct Taxes, which is CBDT, the Income Tax Amendment rules has been notified prescribing new rules for calculating income with respect to the sum received upon maturity of life insurance policies over and above rupees 5 lakhs. So according to the change, the policies issued on or after 1st of April 2023, the tax exemption on maturity benefits under Section 10, subsection 10D will only be applicable if the aggregate premium paid by an individual is up to rupees 5 lakh. And for the amount over and above this limit, the proceeds will be added to the income and will be taxed according to your tax slab rates. The change in the tax provision with regard to life insurance, except for ULIP, was announced in the Union Budget of 2023-24, and according to the circular issued, these provisions will not apply in case of any amount received at the death of a person, and that amount continues to remain completely exempt from the tax. Further, a new clause has been inserted by the board to provide that if any sum is received under a life insurance policy and not claimed as a deduction in any of the other provisions of the IT Act, it will be taxed under income from other sources. Now, as per the tax experts, it is going to ease the process for calculating your tax deduction amounts for the income tax returns, and it is a move which is welcomed by the experts as well as by the people.
All right, thanks Bhavya for all those details.
Welcome back to the show, and we are on that part where we take you through all the stocks that and the sectors that will be buzzing and in action on the back of news announcements as well as brokerages. Well, NSE and FTSE, they have announced a rejig in its key indices. Well, what are the key inclusions and the exclusions too? So let me take it across to Somit to find out just that. Good morning, Somit.
Well, if you see, NSE has announced its changes to the indices. Well, FTSE is expected to announce the changes today later on the later half. Now, firstly, on the NSE front, if you see, they have announced no changes when it comes to Nifty 50, Nifty Bank and Nifty IT Index. But there have been 5 stocks that have been added and 5 stocks that have been removed from Nifty Next 50. Now, on the exclusion side, there is ACC, Nykaa, HDFC AMC, Indus Towers and Page Industries. While on the inclusion side, there is PNB, Shriram Finance, Trent, TVS Motor and Zydus Life. Now, owing to passive fund flow for stocks like Shriram Finance, inflows are expected of close to $56 million, which is nearly 1.4 times its average daily volumes, 20-day average volumes. When it comes to Trent, inflows are expected to be in the range of around $44 million, which is nearly 6 times its 20-day average volume. Then there is Zydus Life, which is expected to see an inflow of around 19 million, which is nearly 3 times its 20-day average volume. Now, on the side of exclusion, there is Page Industries, which could see an outflow of close to $27 million, which is nearly 3 times its 20-day average volume, while there is HDFC AMC, which is also expected to see an outflow of close to $24 million, which would be nearly 1 times its 20-day average volume. Now, when it comes to FTSE, they are expected to announce changes. There could be fresh inclusions and exclusions in the all cap and the all world indices. However, the adjustment regarding these changes will happen on September 15th. Now, 2 stocks that would be added would be moved from all cap to all world index, that is KPIT Tech and AI Engineering. Now, because of this, there are inflows expected to be in the range of around $35 to $45 million, which is nearly 2 to 8 times that 20-day average volume. Then there is Syngene, Mazgaon Dock, RVNL, Apar Industries, which are also expected to be added to the all cap index of FTSE, and there could be inflows in the range of around $12 to $22 million. 2 stocks that would be removed from the all cap index, that is Hudson Agro and Brookfield REIT, while there would be some quarterly adjustment when it comes to HDFC Bank because of the merger, and then there is Kotak Mahindra Bank. Now, because of this adjustment, HDFC Bank is expected to see an inflow of close to $552 million, which is nearly 1.4 times its 20-day average volume. Then there is Kotak Mahindra Bank, where there could be inflows in the range of around $80 to $83 million, which is nearly 1 times its 20-day average volume. So keep an eye out for all these stocks in trade.
Thanks, Amit, for taking us through all the rejig that's happening on the Nifty Next 50 as well as the FTSE all-cap indices. But stay with us then, because the government might consider lowering excise duty on petrol and diesel. So what does this mean for the economy, and how will this impact OMCs and city gas distribution companies? Amit, take us through that analysis.
Well, news reports are suggesting that government might consider lowering the excise duty on petrol and diesel. Now, the excise duty has remained unchanged from May 2022, and post the last cut that we had seen in last year, excise duty was back at pre-COVID levels. Now, if you remember, during COVID times, government had increased the excise duty, but post the last cut, current excise duties that have been charged on petrol and diesel are largely at par with what it was during the pre-COVID. Now, how will this cut benefit? Now, this cut in fuel taxes will help cool the retail inflation, and because of this cut, also fuel prices will come down, which will in turn reduce the logistics cost, which and again will help cool the inflation. Now, inflation for the month of July stood at a 15-month high of around 7.44 times, and even last time when we had seen inflation rise to an 8-year high in April 2022, that at around 7.79%, government had gone ahead and cut excise duty on petrol and diesel by around 6 to 8 rupees. So again, government is expected to do so because the inflation is at a 15-month high. Now, what could be the impact on the government finances? What experts are saying is that this could put pressure on India's fiscal deficit target of 5.9% for FY24. Now, last time when the government had reduced excise duty on petrol and diesel by around 6 to 8 rupees, the revenue loss estimated was close to 1 lakh crore rupees. However, on the oil marketing companies and city gas distribution companies, the listed companies like IOCL, BPCL, HPCL, Gujarat Gas, IGL and Mahanagar Gas, the impact is expected to be negative. Now, for oil marketing companies, it will be negative because they'll have to completely pass on this benefit to users. And even last time when the government had cut excise duty, the oil marketing companies had to bear an inventory loss on their books. So hence, this could be a financial impact, could be negative for the oil marketing companies. And when it comes to city gas distribution companies, it is sentimentally negative because competing fuel like petrol and diesel are expected to become cheaper, and gas prices continue to remain higher. So if city gas distribution companies also go ahead and cut prices, it could be negative for their margins going forward.
Thank you, Somit, for sharing your perspective on the impact on OMCs as well as CGDs on a likely excise duty cut. But let's look at what other stocks will be buzzing in trade today. We have Ankita here with us. Ankita, take us through that list.
Good morning to everyone. Yes, these are the stocks that will be in focus for today's trading session. Now, first up are IOCL, HPCL and BPCL. This is on the back of the fact that India might consider lowering the excise duty on petrol and diesel, and on the back of that, these counters are going to be in focus. The next stock is a Repro, and it is on the back of the fact that they've raised 85 crores by preferential issue of 765 rupees per share, and preferential issue will be at a discount of 9%. Madhusudan Keda, the promoter entity, has invested 50 crores, and Madhukela promoted entity has already has a 3.59% stake in the company, and on the back of that, Repro is going to be in focus today. Next up is Zydus Life Sciences. Now, Zydus has received a final approval from US FDA for Doxepin tablets, and on the back of that, Zydus will also be in focus. Next up is Adani Green Energy. Now, the associate arm has got a SECI nod for the solar PV plant, and on the back of that, Adani Green is also going to be in focus. And finally, we have NLC India, which has signed a pact with Rajasthan Urja Vikas Nigam for 300 megawatts solar power supply, and on the back of that, LC India will also be in focus today.
Alright, thanks Ankita for taking us through that list. We will be keeping an eye out on all these stocks in today's trading session, but stay with us then, because Concord Biotech is all set to list on exchanges today. So Ankita, tell us what the listing is expected to look like and give us more details about what the company does.
That's right. Another stock is going to hit the bourses. It will be listing today, and that is the Concord IPO. It has already generated a lot of interest because, of course, it is backed by Rakesh Jhunjhunwala. Now, if you look at the IPO itself, it had received strong interest from the investors, as the public issue was subscribed a robust 24 times in total during the IPO subscription. Now, as of yesterday, the grey market price was 122 rupees per share, and according to the market observers, the shares were trading at 121 rupees higher than its issue price in the grey market, which means that the grey market is expecting Concord IPO listing price would be around 863 rupees, considering that the IPO issue price was 741 rupees, and Now that the grey market price is 122 rupees, which is around 16.46% higher from the Concord IPO price band of 705 to 740 rupees per equity share. Now the issue size was for 1,551 crores, out of which the entire issue was an offer for sale because Helix Investment, which owns 20% stake in the company, is selling the entire stake. Now, the post-market cap is estimated to be 7,752 crores after the listing. Now, if you look at the anchor investment also, they have already raised 464 crores from 41 anchor investors, and some of the key marquee names that came forward were Government of Singapore, Abu Dhabi Investment Authority, Government Pension Fund Global, Polar Capital Funds. These were the marquee investors in the anchor investment. Now, if you look at the financials of the company, they have seen a significant jump in their revenues in FY23, which stands at 853 crores versus 617 crores in FY21. Their EBITDA margin has been, however, hovering in the range of 40 to 42%. And if you look at the peer comparison, Concord is estimated to be trading at a PE multiple of 32.29 versus its peers like Divi's Laboratories, which is trading at a PE multiple of 54.15, Suin Pharmaceuticals at 30.08, and Loris Labs, which is trading at a PE multiple of 37.4.
Well, thank you, Ankita, for taking us through the details of Rakesh Jhunjhunwala-backed Concord Biotech, which is about to get listed today. But Vamakshi is here to take us through the brokerages. Vamakshi, we have notes coming in from Jefferies as well as Motilal Oswal. So take us through that. What's on the brokerage radar for today?
Well, yes, let me first start off with all cargo logistics. Now, this counter is in focus on the back of a brokerage note that came in from Jefferies, and they have highlighted that the management appear to be quite candid on margins being weaker than expected, but nevertheless, the company does continue to get market share. They're focusing on cost rationalization, and over the long term, when the volume recovers, this could actually in turn benefit the company. So, given all these factors, Jefferies has maintained a buy rating on all cargo logistics, and in fact, cut their target price from 370 to 340 rupees per share. Other than that, let's also focus in on Finolex Cables. We have a note again coming in from Jefferies, and they have highlighted that the company is a beneficiary of the housing as well as capex cycle in India. The communication segment particularly is likely to benefit from the 5G rollout, and in fact the price erosion in optic fiber could be mitigated with the import ADD of nearly 5 to 15%. So given all these factors, Jefferies has maintained a buy rating on Finolex Cables, but also hiked their target price to 1,270 rupees per share. And lastly, let's focus in on AU Small Finance Bank. We have a note coming in from Motilal Oswal, and what they are highlighting that is the fact that deposit mobilization is very imperative in order to support growth. The loan growth for the bank remains quite steady, and in fact they're estimating a 28% CAGR from FY23 to FY25. But nevertheless, elevated funding costs do remain a near-term drag for this counter. Business investments are continuing. They're in fact aiming to build a very sustainable franchise going ahead, and Motilal Oswal, on the back of all these factors, is expecting earnings to accelerate from FY25 onwards. So given all these factors, Motilal Oswal has gone ahead and upgraded its rating on AU Small Finance Bank from neutral to buy. They've also gone ahead and hiked their target price from 810 to 825 rupees per share.
Thanks, Amakshi, for all those details on what the brokerages are keeping on their radar this morning. We will also be keeping these stocks on our radar this morning. And stay with us because the RBI has approved the appointment of PR Seshadri as the MD and CEO of South Indian Bank with effect from 1st of October for a period of 3 years. Amakshi, tell us what this would mean for the company and give us more details on this appointment.
Well, yes, that's right. South Indian Bank is in focus today. We have the bank appointing Mr. PR Seshadri as the MD and CEO with effect from 1st October, like you rightly pointed out. And in fact, this has come in after the RBI approval came in for the same for a period of 3 years. Now, prior to joining South Indian Bank, Mr. Seshadri served as the MD and CEO of Karur Vysya Bank. He has also worked in Citibank in various roles prior to that. Now, let's also look at his track record at Karur Vysya. He was appointed as the MD and CEO of Karur Vysya Bank back in September 2017, and during his tenure out there, he has focused upon number one, balance sheet cleanup with improvement in slippages being seen despite the pandemic. He also focused on digital initiatives like migrating the core banking to latest versions with API-enabled architecture. Other than that, he also implemented risk-based pricing. He launched the Project Neo, which was in order to establish new channels of distribution through digital technology. He also implemented a performance-based incentive structure for employees to encourage them to put in extra efforts. So all in all, given all these factors, we have a few notes coming in from brokerages, and largely brokerages are highlighting that this selection is quite positive for South Indian Bank because it would mostly drive the continuity of the transformation that the already outgoing MD and CEO Mr. Murli Ramakrishnan had initiated. He had been working on plugging some of the loopholes with South Indian Bank, and with South Indian Bank now at the fag end of its cleanup NPA cycle, several initiatives that have been undertaken in order to improve the operations of the bank, Mr. Shishadri could provide the much needed guidance from the top. So all in all, this is a positive development is what brokerages are highlighting for South Indian Bank.
Well, thank you, Vamakshi. So, South Indian Bank will be in focus today and positive development expected as Vamakshi pointed it out. But Morgan Stanley has come up with a view on non-life insurance as well as the gross direct premium income has also witnessed an uptick of around 1% on year-on-year basis. So, let's go across to my colleague Sharad Dubey to get further details on this. Good morning, Sharad.
Well, yes, in focus we are having the non-life insurance data, and do remember that the July GDP numbers, which is the gross domestic premium numbers for the motor segment, that is up roughly 15%. But if we talk about the retail or the group health segment, that has actually outperformed, giving almost 18 to 19% odd returns on a year-on-year basis. Now, of course, the growth divergence between the public as well as the private insurers, that has actually come down in the month of July over the previous 3 months. And let's look at the market share changes which has happened for the retail health segment. Star Health has actually maintained its market leadership, but there has been a flattish growth on a year-on-year basis. Now, when it comes to Bajaj Finserv, there has been a slight increase coming in their market share. And for the motor segment itself, looking at it, ICICI Lombard General Insurance continues to lose market share. Apart from this, even for Bajaj Finserv, there has been a slight hike of almost 20 basis points when it comes to the market share. And even Morgan Stanley came out with its report, and they have stated that this year-on-year growth was, of course, led by the retail and the group health segment, and also the motor OD, which is the own damage segment. Apart from this, ICICI Lombard actually outgrew in certain segments in the private sector, such as the marine, crop, miscellaneous, and the retail health segment. But overall, it continues to lose market share in the motor segment of OD as well as the TP segments.
Right, thanks Sharat for taking us through all those details. But with that, we're completely out of time on this edition of Market Cafe. Thanks so much for staying tuned. Don't go anywhere because the market will take all the action ahead.